Hey Forex Fortune Hunters, Tom Wilmot. Well, today it's Fidelity Fortune Hunting again. Let's take a look at Advanced Trader Pro. I've got some updated tips for you. And also I've observed a number of times that the head and shoulders upside down pattern has emerged. I want to share that with you and also talk just a little bit about Fibonacci. So hold on to your hat and we'll get started right after this. Okay, folks, thanks a lot for watching our videos on ATP. Let's get started. The last time we were together, we were talking about the low that was formed on the S&P. This is the SPY down here in this area back between the 20th and 25th of March. And since then, we've rallied a bit, as you all know, and some things have rallied more than others. The NASDAQ in particular, the Qs, if you're trading in Fidelity and not futures, the NQ if it's futures, and E-mini, for example, and those technology stocks have rallied really fast from the bottom. So now we want to take a look at how we might have known or how we can look at this pattern in the future. We've got right now a 195-minute chart up on the board, and bottom line in this particular video, I wanted to share that 195 minutes is approximately or exactly 1/2 of a daily session, and if you were to drop down to 78, you'd get 4 bars in one day session of the New York Stock Exchange. So in any event, that spreads us out a little bit. It's a little more visible than it would be on the daily chart. But I'd just like, first of all, to notice that what we did was had this wicked decline, and then we had this rally and so forth. And please notice that this is a beautiful head and shoulders upside down. Also sometimes known as the King's Crown. Here's the specific bottom. We came down, we set a left edge. We came back, we set a right edge in this area. And then we were off to the races again. A little hard to know how fast this is going to happen, but once you get into this area here, you can see that we didn't want to go down any further and in fact rallied to the north. This pattern was beginning to be observed. I want to show you how badly compared to that the Russell did. Let's take a look at the Russell RUT, and bottom line is this is a new tip that I have for you that was contributed by one of our members in the comments section, and we're really appreciative of that. It's kind of a nuisance on Fidelity Active Trader Pro to choose these time frames and then choose your frequency and so forth. For example, here are the various minutes and so forth that you could do. I put 195 in here. You could put the 78 if you wanted it closer, but basically the situation is, if you'll notice this arrow right here, down arrow now, this is the normal position. If you click on it, left click, and then notice here is a bar. You can open this up wider if you would like to have this all stretched out and tightened down so that you can see what's happening here. Notice as we get into this with our 195-minute chart that the Russell really has just gotten crushed. The small and medium-sized businesses, as we know, are suffering mightily, and not nearly the rally that we've seen in the other charts. Likewise, I noticed that if you take a look at the Federal Express and the transports that were also crushed in this environment, let's do the same thing. We'll go over here, we'll left-click and grab this bar, pull it back to squeeze it in. Notice the same thing is true here. I mean, poor FedEx down to a low of $90 from, it was $250 not 6 months ago. So this has really been crushing ever since the trade war started with China, and really has impacted their situation dramatically, obviously, over time. Now let's compare that to let's see, how about Netflix? That's been much in the news as everybody has to stay home and do what they're doing. We can take a look at the same chart here and notice that what we had with Netflix was a low, but not nearly so difficult, down only to about 300, and then off we went to the races. Now notice here the same pattern, very clearly defined wings right here, the low, the drop, and the gap down into the low, Back we went to fill the gap, and then held right above it. So that's the upside down pattern that we've observed so many times. Now, I'd like also to share with you that if you were to take a look at the drawing tools, and if you were to grab this one, the trend line bar right here, we can see right here, and it will come out a different color. I really can't stand ATP for this, but bottom line is it's almost invisible. If you take a look at this, and then we've got to change our color, change our color here. And I certainly wish, and if you guys vote with me in the hotline to get them in the comments to do this, we'd like to have a default value that we can have user defined. Every time I put a trend line in or horizontal line or anything else, you have to come back and do it again and again and again. So in any event, let's stop complaining and hit apply. And notice right here that we have this situation on the downtrend. Now notice that when we get to here, that's when we have a break in the action. The low is probably in place. Then we rally, and then we come back, and you want this wing to be set approximately here, and we could do that with our drawing tool should we wish to do so, the horizontal line. Okay. Notice here that we went up and we actually set another level higher. Let's put the line up there just so you can see it. And you can play with these yourself, obviously, as you're doing your own chart work. But bottom line is, notice that this is the area. Once again, I hate this pea green color, so let's make that white and show you. And we'll improve the thickness here so you can really see what's going on. Okay, here we are. This was the first one. Came up through here, fell back, and then support, resistance becomes support at this area, and we were off to the races in Netflix. Okay, let's take a look at another one, and we're going to get to some of our own template activity and multiple moving averages in just a second. Let's see what we've got. Microsoft was an excellent example as well, and you can do your own with Apple and others. Now, what I'm going to do here is go out to 3 months and change it that way. And then I'm going to come back here and pull this to squeeze. Here we were with Microsoft. Now, what I'd like to do here also is let's change this from the daily. Let's go down to the 78 because obviously that's also very helpful to us. We'll put this in here. Hang on. These get fussy sometimes. 78 minutes. We're going to apply. And what we're going to have now is this situation where we came down. I'm going to drive it over here. Let's go back and enlarge this just a little bit. Notice that we had this down into the low. We came back up into this area. This was setting the low down to 78 minutes over several days as they were building a bottom. Then we came to this level right here, and notice that that's where we were able to finally turn and move higher. Apple also gives us a very good view of the same charting pattern. And let's take a look at our Apple chart, and here we go. This is even better. Look at this. Down we went into the low here on the 23rd of March or so. Back we went, and there are your two wings very clearly visible, and then you were off to the races. Okay, now you can drive this down even to a 60-minute, 30-minute, 15-minute chart if you're trading intraday, and the only thing, as I've mentioned before, you have to be a little careful of is that if you don't have 25,000 in your Fidelity account or any other broker's account, the exchange rules suggest that you're going to have to be categorized as a day trading criminal if you close out a trade without it going overnight. So that is really a difficult situation even for options in this market, because you don't know if you're going to get a mad reversal even in a 24-hour period. So you have to play it a little differently if you're under 25,000 in your account versus if you're over 25,000, when you can play it a little looser and you can cash in your chips before the close. So that's just something to keep in mind on all of this. Notice here, this might have been a pretty good bet based upon the fact that we'd had this up move on the 78-minute chart, this hold here of the wings. Off we went, and now you're in a position where you may well be able to take that call debit spread or call put credit sell a put credit spread, for example, and take advantage of the up and away kind of moves, even with a call in this environment if you can find a fairly priced one. And you could even get out on the same day if it's a $25,000 account. If not, you may have to hold overnight. You just want to be careful to pick your spots. Okay, now there's one other thing I did want to share with you. Notice that this particular chart also had what we were looking for. We'll take a look at our drawing tool again on Apple, and we'll come here, and we only had one time really when we had even kind of a thrust higher. Let's go here and change that to our yellow, just for the white, just for purposes of knowing what's happening here. We'll make it a little thicker so that we can see it clearly. And so there we go. Now notice once again, King's Crown, down we go into this area here with the upside down head and shoulders. Here's the head upside down, here's the left shoulder, the right shoulder, and then you're off to the races. And you can very clearly set your stop simply by moving your horizontal line into this position right here. Okay, now one other thing that I wanted to share with you, and I haven't before, there is also a Fibonacci drawing tool, and in this environment, the ATP environment, it's not particularly helpful. It does, for example, if you wanted to have Fibonacci go down to here, take your retracement, and then see what your extension is, that tool will not measure it. It only measures what I consider in a backwards way. Let me show you how that works here. We'll put our top on it, and we're going to also have to change this color too because it's ugly purple. Let's move this up a bit so we can see what we're talking about here. I'm going to change this also to yellow. Come on. I'll have to go up here and click on it, sorry. I'm going to get rid of this trend line, and we'll just go with our Fibonacci now, and we'll make this yellow so that it clearly stands out. We'll even go with, well, you don't need any better line thickness. Now, here we are. What I did was I suggested in this particular reversal, usually you would have a 127 extension, perhaps a 1618, and then double 200 in this particular case. Now, what we see here is we're struggling to get back up to even where we began this second phase of the downturn. If you looked, down we went, pulled back probably into the 50% range, and then off to the extension to the downside. We can't measure that in ATP because, as I mentioned, the Fibonacci tool simply doesn't support extensions. What we can see is that it would go in the different direction. Now, let's take a look at this. Let's see if there's anything here. Notice that what we've done from this point down to the low is that we have recovered. We've come back to the 38% bar, and then we were off to the races again. And what you can do in this situation is you can add a value. I'll get rid of the 23. That just is in the way for me. Add a value, and we're going to put the 1618, and I'll make it a 162. Just because the decimals don't really matter here, and we're going to add that value, and then we're going to apply it. And you can see up here is the 1618 extension would be in this area here. So let's go back and let's modify that again. We'll get rid of the 1618, which is down here. We'll get rid of that one, and instead what we're going to do is put 127 in there and see how close we are to this particular point. And sure enough, that's within striking distance. So this is an area that I would suggest maybe not a selling point, a short sale, but obviously if you're into the market here, you're going to want to watch out for that kind of an up-level target as being one that potentially is going to be showing you some resistance from a Fibonacci point of view. Let me pull this over one more time. And you can play around with this particular indicator on your own time, on the other stock symbols. Okay, now just as a quick review, we took a look at this area down here where we can squeeze or fatten up our charts. which was a great catch by one of our wonderful members. Can't take credit for something I didn't have a clue about, and that's really a lot easier than having to deal with this area down here while you're changing your charts. Now notice one more thing. Let's get rid of the Fibonacci area here just for a second. One last thing I wanted to share with you, and that was the following. Let's see if I can get rid of it or not. Maybe I can't. Well, forget about that. I would like to go back up to our diskette here, which is our various template, multiple moving average templates. And I've got not on here now, which means I'm just using candles. I thought that would be helpful for our head and shoulders activity today. But if you wanted to have something, another view of it like Super Gamma, this is what you could definitely do. And you can see here, if we open up our chart and see this a little bit better, we're going to get rid of this one too. That RSI doesn't need to be there today. What we'd like to do is raise this up a little bit more. I'm almost done, folks. Here was our apple with our nice curve there. Now notice that we had our change over here, and our multiple moving averages in what we call Super Gamma are headed higher. These are the 50, 48 to 50 EMA, a 38 EMA, and then I've got my 12, 16, 20, and 24, all of those stacked. And notice this area here. This is more the scalper group in this area. Here are your longer term people. And when this 38, 48 crosses over here, you can see that we've changed our trend and probably are heading higher. Likewise here, this pullback, notice this first pullback on Apple, we could not recover. We couldn't have that crossover position here, and then we zing down to the bottom. Once you come up into this area, you can use a stop loss here. Notice that even though this was up that high that time, it closed at a lower level, and so forth. So that's enough for today, guys. Fibonacci, multiple moving averages, how to save them on your discs up here, and how to squeeze by clicking this arrow here in this area. So ATP fans, trade safe, stay well, please stay well. Leave a comment if you have a question, and we'll try our best to continue on this path in coming videos. Thanks so much for watching. Trade safe.